Let's get started. For those of you that have been in some of these sessions recently, if you have any questions, you can always ask in the chat. Um, we'll stick to today's topic, but we'll also certainly spend most of our time in the live markets applying what we talk about. And in these sessions, if you're new, um, we focus on one strategy. So that's the supply demand strategy we developed many years ago. And it's simply quantifying the market's real supply and demand to answer two questions. Where are prices most likely to turn, and where are they most likely to go? Okay. All right. And for those that want more information, beyond these sessions, you can always attend one of the workshops if you want. They're free. I would suggest that if you have trading experience, you would go to the advanced workshop on the right there. There's a link in the chat if you need it. So like last session, let's review some of the market opportunities from this week. And the main purpose is to, demonstrate the supply demand strategy that we go over, and just show the story of supply and demand over the last few days, right? How it works and what causes what to happen and why. All right. Remember, we always have these same 3 to 5 puzzle pieces that we put together to determine where any market's going to turn and where it's going to go. And it's obviously all around supply and demand, focusing on the imbalance, right? But let's take a look. So this is going into late last week. We had the Dow rally, big rally in the Dow, right? 2,000 point rally in the Dow from our demand zone all the way up to, the highs, right? Up in here. So does that give us any information about supply and demand in the global equity index markets at that point? Well, again, everything we need to focus on, everything needs to be objective and rule-based. So what that's telling us is, while we don't have the footprint of supply, price is pretty far from demand. Okay, and I'll show you a little diagram in a minute that helps explain that. So around that time is when the dollar, which is, we looked at this chart the last time we were together here in these FX Street sessions, but that's when the dollar was trading in here and with 2 supply zones above and a demand zone below. And this dollar chart right here is over here in our live. These are all screenshots, by the way, from the live morning sessions that I deliver each day to our members. And so this chart has really guided us all week with regard to equity index market, right? Stock market turning points and moves, and also obviously FX, Forex turning points and moves, anything related to the dollar. So the market, dropping, the fact that the dollar had room down to demand, right? And this move down was that big move up in equities, right? Because remember, the dollar is an inverse market to equity index markets, right? Dollar's inverse to stock markets, equity index markets, stock markets, same thing. At key turning points, there are times when these markets move together, but when they are reaching opposing supply demand levels at the same time, that's the high probability event. We've gone over that in these sessions for years, right? So then the dollar comes down and hits demand. Well, that's the time where we want to look for supply zones in the global stock markets. And this is the time right here down at demand where we expect global stock markets to turn lower. So we had a couple of them, right? So the Dow traded right up to our gap supply zone. Now, for those that are new to this, while the circle means it's an overnight supply zone, which typically are not high probability opportunities in the stock market. Okay? Overnight supply zones, right, off-hour supply zones in the stock market, a market that's designed to go up over time. Typically, we ignore these most of the time. However, someone tell me, what are the two things that this supply zone had going for it when we were looking at it here in the live sessions? What are the two things that suggested there was a big supply-demand imbalance here? In fact, three things. Someone tell me who's been following along. What are the three things that suggested this big drop in the Dow was going to happen? It's actually kind of four, but what are the three? Right, so Thomas, novice space below. So I think what you're saying there is how far, right? How far price was, part of it you're saying is how far price was below. And of course, yes, all this novice space below. This, you're talking about this right here. So both of those things are one clue. Yep. What about two others? There's more, but what about the other big two? What about so we've been talking about location of our supply demand zones. What about structure? What are the two things, just looking at this picture here, that suggest there's a big supply demand imbalance on the supply side? Yes, a gap down. That's another one. Good one. So the fact that price, in other words, supply and demand was so out of balance here, there was a gap down in price. Right? Price had to gap down to find buyers. That's one clue. What's the next one? Right? How about the fact that the first time price came back to this level, it barely touched the supply zone, if it touched it at all. Looks like it almost did. Right? Maybe it did. That's another clue. We call that secondary evidence. Okay. So then Dow and other markets trade up to supply, and we have a big drop. Right? When this is happening, that's when the dollar is turning higher from demand. So we had the big drop over the last 2 days, partly because the dollar, a major inverse market, finally hit a demand zone. And notice the rally in the dollar that brought prices yesterday almost up to supply. So when equity index markets are falling as the dollar is rallying, as the dollar gets close to the supply zone, what should we be looking for in stock markets, in equity index markets? What should we be looking for when the dollar gets very close to or at supply with room below? And this doesn't look like a big move, but this is a daily chart. What should we then be looking for in the global stock markets? Yeah, to buy. Buy where? Where do we always want to buy? Yeah, demand, right? Wholesale prices. Right. So that's what we did. So the market fell. That brought the NASDAQ yesterday down to our, whoops, get rid of that. So that brought the stock markets down to our demand zone. And right, so what this zone had going for it, it was a fresh zone with, again, secondary evidence right here suggesting a big supply demand imbalance. Okay. Nice big profit zone above. The NASDAQ rallied about 200 points off of our demand zone yesterday. And right here is when the dollar was right very close to its supply zone with room below. The QQQ, which is the ETF for the NASDAQ, also came down to the exact same demand zone as I just showed you in the NASDAQ futures. Right? Drop, here it is. Drop, base, rally. That's this zone right here from our live session. And it was fresh. Okay, and there was room above. So you can see here, let's introduce something else now. Let's take this to the next level. Demand, supply, and what do we call this? This is the majority of trading activity between supply and demand. What do we call that? Call it novice space because we don't want it. We shouldn't be entering positions in the middle, right? But what else do we call it? Right? If the majority, yes, if the majority of people agree to buy and sell here, We can refer to that as fair value. So you can see this is right out of our supply demand, the Pinnacle method class. When we cover location, it's all about supply, demand, and fair value. Obviously, most importantly, what that looks like on a price chart. So let's start with fair value. So fair value on a chart, right, means the picture is, where is the majority of trading activity? This is what that looks like, which means that this is where the majority of buyers and sellers in whatever market we're looking at agree to buy and sell. And I do mean any market: stocks, futures, Forex, crypto, real estate, bonds, doesn't matter. Right? So fair value, where the majority of buyers and sellers agree to buy and sell. That is naturally going to pull price back to it. That's what the magnets are for. Does everybody understand why? Okay, that's always going to be the true magnet for price is fair value. So we want to be able to identify that on a price chart. Down at demand, like we ran into yesterday in the markets, at demand, there is competition to buy. That competition to buy pushes price higher. Just like at supply, where we were a couple days ago, right? That competition to sell at supply pushes price lower. So it's this constant push and pull, right? Underlying governing dynamic of the markets, right? Supply and demand, that is always at play. Now let's take a look at that. So as the NASDAQ, for example, came down to our demand zone and rallied, right? That competition to buy pushes price higher. That was when the dollar was trading lower off of that supply area. Well, that's when stocks like Tesla yesterday also came down to our gap demand zone, and that competition to buy pushes price higher. But look where Tesla ends up, right back at fair value. Make sense? Here's the S&P as well, coming down to the same demand zone we had last week, wholesale prices, and that competition to buy at demand pushes price higher, right back to that picture of fair value, which is where the majority of buyers and sellers agree to buy and sell. Does this make sense? And whether they're looking at stock markets and inverse markets, or we're just looking at pure Forex markets for Forex decisions, commodities, right? Energies, metals, bonds, doesn't matter. Okay. Crypto, Bitcoin. Bitcoin's had some great moves off of our supply demand zones. As long as there are people making buy and sell decisions behind the scenes, this is how the market always works. Now, what about computers? What about dark pools and algorithms and things like that? Does that change any of this? No, it just speeds it up, right? It just makes spreads even smaller and speeds everything up, but it's still all about supply and demand. Even trades and transactions. What about trades and transactions that don't actually happen in the actual market that maybe you're involved? Maybe a transaction that happens sort of in the NASDAQ with a company or shares of stock that doesn't necessarily take place in your, that doesn't show up on your platform. Or maybe the Forex market is even better example. What about a big currency transaction that doesn't show up on your platform? Does that change things? No, it's still supply and demand, right? Okay, so hopefully that was helpful and makes sense. And with that said, let's now go to the live markets and go through some opportunities. Okay. And by the way, I can look at any market that you want to look at. So if you have a market where you want to go over supply, demand, and all that, we can. Otherwise, I have a list of markets I can go through here. Okay. The Nifty. So that's the one market, Nitesh, that I am not able to get on TradeStation. But in our next session together, I can get some Nifty charts going. But so the Nifty, and for those that don't know what the Nifty is, that's it's like the S&P or Nasdaq of India. It's the major index there, right? So one thing about the Nifty that is fantastic is it gaps a lot. So if you think, other equity index markets around the world gap, the Nifty really gaps. And it's gapping because of those big supply demand imbalances. But what you'll find often is it's gapping right into zones, right? And in India, a lot of people, they buy and sell based on news. So if the news is really good on a company, a lot of people come in to buy. The market's not open yet, so all that pent up demand, right? Those buy orders need to find sell orders. Where are those always going to be? They're going to be at significant supply zones because that's what makes it a supply zone is sell orders. So often the market will gap up right to that level so you can match those buy orders with enough sell orders to fill them. And once that last buy order is filled, the market then drops down to demand. So Nifty's a great market, but unfortunately we can't pull that one up at the moment. So okay, so let's keep going here. So now that we hit the supply zones early in the week, and yesterday came down to the demand zones, we have a choice. And this and what I'm telling you here is in any market, anytime. Right. So I just showed you how we've gone from our supply zones to our demand zones. So now we have a choice because we're in between those two zones. So we can attempt to buy and sell at those same levels again, or we can go outside of that range that is defined by the supply and demand zones I just showed you and focus on fresh supply and demand zones that are outside of that range. Those are always going to be higher probability than the zones that have already been tested. Does that make sense? So typically we choose to go outside that range and deal with the fresh zones. Perhaps a market to look at would be this one. So here's that demand zone I showed you from the NASDAQ from yesterday, right? So we came into this zone, we rallied, and then I want to show you where the next fresh supply zone is. I thought that was going to be up here, but it's not. Let's go to the, we might have to go, oh, wait a second. Yeah, no, I think we do have it here. No, we don't. Let's go to this market. So most of these equity index markets are, different versions of the same thing, right? So we can look at, and again, we can really look at any of them. And now I'm actually thinking maybe we should just not even move off of equity index markets and go to Forex markets. Should we do that? Or even the crypto markets? We can certainly do that. And that's the beauty of this, any market, any time frame, any financial purpose, that's really what we're talking about here. Okay. Oh, I almost forgot. Let's go to the dollar. Let's at least start with the dollar. Let's go back to the chart that has really been guiding us all week. Well, more than just this week. So there's that chart. So again, dollar trading into demand. This moved down. Stock market was up big. This is the last 48 hours. The dollar rallies almost up to supply. The market falls down to stock market falls down to demand. Okay. Then up here at supply, from demand, the stock market, the dollar falls. The stock market rallies big. Now we're seeing the dollar rally again off of this demand zone, and could very easily be headed for this. So that means stock markets are likely falling, from that area, right? And that would be, well, we've seen that already. Okay. We can certainly spend a few minutes on, we can look at, let's pull up, we'll pull up Bitcoin here. Okay. And so let's go to the large time frame for a minute. Bitcoin has certainly been on the on the move here. Let's take a look. Yeah, and it's really for us. It's been the 4-hour chart. So these are the area. These are the zones that we've been dealing with. Obviously, this was I believe we went over these in FX Street sessions. So we had a big rally off of this demand zone, and we actually just came back to it. Looks like over the last couple days, right? Yesterday, came down to this level again and are now rallying. Bitcoin may have a tough time getting through this. And then we hit this 2 days ago. We were watching that one. But I have a position in Bitcoin, by the way. Almost forgot, but full disclosure. So anytime we look at a market that I have a position in, I will let you know. So this area, though, this gap, let's go to a smaller time frame and take a look up here, because we're likely to find a footprint of a real nice supply zone up there. Going to go down a time frame or two and take a look. And actually, we may not. Nope. So, okay, this is a good example. So we had a supply zone up here, and this is why we go down to smaller time frames. Right, so we've actually already been back to this zone, so it's already tested once. However, the fact that it just kind of touched this level, barely went into it and gapped down, suggests there's quite a bit of supply of Bitcoin up here, right? A lot of willing sellers supply up here that own Bitcoin. So this is probably going to be a high for a while. We'd have to fill all that supply. Enough demand would have to come in, to fill all the supply that's sitting up here for price to go higher. All right. So that is Bitcoin, and a lot of them look, similar to that. Okay. Let's go over to, I think it's this market right here. So if we take a look at the Dow, I want to see, not that one. Where is it? I want to see if we made it up to, we did not. There was a supply zone the other day. I want to see if we made it back up there. This area here was what we were looking for this morning. But the market went went down. That's fine. No surprise with the dollar rallying as it is. Okay. Another market that obviously we watch bond markets a lot. This is another market that, the bond market. So we've also been watching this TLT, which may not seem like a big deal, but we look at 4 or 5 major bond markets to help give us evidence as to where the stock markets are likely to turn and where they're likely to go. And again, it doesn't matter what you trade: stocks, futures, forex, options, bonds, crypto, whatever, energies, metals. We apply the same rules, same strategy. So notice a lot of these bond markets are up into supply zones. Now, none of these are fresh, so the bond markets can move higher. Notice they attempted to touch demand and couldn't. That suggests that in this general area, there's probably a big supply-demand imbalance on the demand side. So, bond prices can push higher through these supplies. You certainly wouldn't want to be buying them up here, but they can push higher, and that would be bearish for equities. Peter, great questions. The supply zone means the same thing as resistance zone. No, not at all. Not at all. Very, very different. Um, a lot of differences there. Okay. And we can go into those in time. In fact, we can do a whole little whole lesson on that at some point. Another big market that um, is the this FGBL. So this was another one that was giving us big clues all well, it always gives us big clues, right? Another big inverse market to uh, global equity markets, right? Inverse market. This is the big European bond market, the Bund. Okay. So this one you could see we've got demand, supply, and then our middle area. So at the moment, a little bit earlier, which is why I went here, it looked like the Bund was going to come back down to here. It's back in the middle. So markets that are in the middle, fair value, nothing to do. Let everybody else buy and sell there. We don't want to buy and sell there. Okay. So again, if you have a market you want me to look at, I can certainly do that. Any FX market, I know there's probably a lot of FX people here, and that is not a problem. Let's take a little peek at the dollar again, which is strong. So if the dollar does, looks like it's kind of getting up there. If the dollar does get up to about 91.50, we would expect it to stall out and turn lower. It turned lower from 91.42 yesterday, right? So, and having said that, sure, Dimitri, as we go to, oh, sorry, I didn't see some of those others. Yep. If we go to other FX markets against the dollar, just keep this picture in mind, right? This is our guide. All right, let's take a look. So I believe we went over the Kiwi last time. And so we can start with, here's that big weekly chart. Remember we were looking at just to know where we're at in the big picture. So we're sitting a little bit below that big supply zone there. And let's go to a smaller time frame. Okay, we'll go down here, skip a couple time frames. So we almost came back up to this this supply zone that we see here. Didn't quite get there, and that's okay. Now that supply zone, we went pretty deep into that area. You could see the first time we came back there. So we would not take that again. Right? Once you see this, you don't want to take that zone again. Same thing on the bottom. Those areas worked out fine, but now now we're done with them. So let's go to another time frame here. Okay. And let's actually go to the futures for this market just for a moment. And then let's go to this time frame right here. Okay, so again, same thing, obviously, same supply zone. I thought we had closer demand here, but we don't. So we probably don't want to be a buyer in here. And then when we go below that, there's nothing here that represents fresh demand. So, unfortunately here we would, at least in this time frame, which is a pretty big time frame, we'd be looking just below 68. So big profit zone down there. Thought we had something closer, but we don't. All right, let's keep going. Let's go to the euro. And yes, we can look at the spot. It looks like you want to look at there. Okay, so we're going to look at 3 or 4 time frames here. First one will be, let's start with the daily chart, big time frame here. Okay, but you could see, oops, always getting those Skype calls. There we go. So you can see while we have supply, demand, price is not in the middle, but definitely closer to the middle than either of those zones. Very important to realize that. At the same time, we just saw that the dollar, which is a weighted index, of course, the euro is the biggest slice of that weighted index pie. The dollar having that supply just above, that's this demand zone right here in the euro. Okay. And then obviously the euro went pretty deep into this thing, so we could see the euro turn higher, from down here. And let's keep going. Come down to the 4-hour chart. We had a couple supply zones here that are working out fine, but we would not use those again. So the supply is being chewed up here. If we do get a bigger drop in the euro, the 118.18 area, structure-wise looks good, location-wise not great. That's why the zone is gray. So it's all about structure and location. Those are the only two things we focus on when it comes to supply and demand. Why? Because that gives us the biggest objective, the most objective information as far as the how out of balance supply and demand is. And it's all about that imbalance. The greater the imbalance, the more likely price is to turn. So gray zones are good structure, poor location. Yellow zones are good structure, good location. All right, let's go to one more time frame here, and that's going to be this one. Not sure how far we are from. Oh, there we go. Okay. So after rallying from the demand zone below, we do have this 121.13 area above. Notice it's already tested, so there's that secondary evidence. Price just touched the zone and fell. So that suggests that another move into this area, price would likely turn lower. And of course, you have a couple of other areas sitting above that. All right. If the euro gets up into here, that would push the dollar a little, deeper into that area of demand. And actually sitting below that daily demand zone in the dollar, there's a little bit of demand sitting below that daily demand zone, and that would line up nicely with this area here in the euro as far as supply goes. All right, so we just looked at 3 different time frames of the euro, and going down the list here, Dimitri wants to look at the Aussie dollar. No problem. Let's pull it up. Okay, so we'll start with the spot market and then we'll move over to the futures if that's okay. So the Aussie dollar, if we do get a drop in the Aussie dollar, we do have multiple demand zones on top of each other, really starting around 73.86. Okay, this first one is tested already, but again, there's that secondary evidence giving us some confirmation that there's really likely to be a big supply-demand imbalance down here, if you can see that first pullback. Okay. Yeah, good question about the candles. Yeah, everything we do is very rule-based. Not a lot of rules, but very rule-based. And yeah, you don't want too many candles, or I guess the better way to say it, less time at a supplier demand zone means a bigger imbalance. Okay, less time, bigger imbalance. Let's go to the Aussie dollar futures, and we do have rules around all that, of course. I know we've gone over those here before. Okay, so let's go to this chart right here for the Aussie. So much closer to current price, which means location is not ideal, but these still qualify, right? These meet the minimum criteria we're looking for. Looking at 120-minute chart of the Aussie futures, 76.95 is where that level comes in, and then another demand zone below that, 76.52. Notice price has attempted to come back to this level a few times and hasn't been able to, so that speaks to the imbalance here at the level. What do we call this stuff right here? All of this trading activity, all of this wide and whippy trading activity, we call it novice space. Why do we call it novice space? Because you don't want to buy and sell in there. Only a novice trader would buy and sell in there. Now, for those that don't understand why that is, notice, price goes up, then goes down, then goes up, then goes down, then goes up, then goes down. Just this constant, price is having such an easy time going through this area. What does that tell us? That tells us that there's really not likely to be a significant supply and demand imbalance inside this range, inside this area. If there was, price would not have such an easy time going through that area. Make sense? Okay, so that's the 120. Let's go to the 60-minute chart. I think this level's a little bit far from current price. It is. We have two supply zones, but again, notice they're above all of this trading activity. We want to keep it high probability. Okay, we want to using this whole concept of structure and location, we want to focus on fresh supply and demand zones that are outside of the novice space, far from fair value. Right? Probability is higher, profit zones are larger. Profit zone and probability go hand in hand. Okay. And I think some of you may have taken the Pinnacle Method course, so you know what I'm referring to there. All right, so that's the Aussie dollar. Let me just look back in the chat here. Okay. Gold, we could certainly take a look at gold. I see someone wants to look at gold. Now let me ask you this: when we go to we're bouncing around different markets, different asset classes. When we go to such different markets and different asset classes, with regard to supply and demand, does anything change? Do we need to change kind of how we're looking at the stuff, how we're thinking about it? Does it even matter? I'm sorry, here we go. GLD, let's take a look. So here's gold. And let's take a look. So really the 4-hour chart of gold is what we've been focused on. I think we went over this last time. Didn't we go over the novice gap and pro gap? I'm not sure, but I thought we did in our FX Street session. But anyway, I want to point out, because we're not together, we're only together a couple times a month, but sitting, if gold does drop again and gets below this 157 area, we have multiple yellow demand zones sitting on top of each other. Those are high probability. Okay. As far as supply goes, we need to go to the 180. And the next fresh supply zone above current price is likely to be at 170, basically 170.40 up in there. Okay. Make sense? Okay. And that is that's gold. All right. So I know we're kind of out of time here, but we tried to cover a lot in the 45 minutes we have together. So hopefully that was helpful. And if you, again, if you have any questions or you want to take things deeper, you can always come to the workshop where obviously we focus on supply and demand there, go over some more of the rules. And if not, we'll see you again in another FX Street session soon. All right, there's the link in the chat if you need it. And all right, have a great day. We'll see you next time.